Finally, Deutsche Bank, which is German, of course. That means it's based in Frankfurt, where the sausages are very tasty, and it has the biggest position, obviously, in the biggest country in Europe. But it is, of course, a global player. It's got big investment banking and trading and advisory businesses in the US and in Asia Pacific region. Market cap, though, is 25.6 billion euros. If that sounds like a small number, well, it used to be smaller until about 3 months ago, so we'll look at that in a bit. Not currently profitable, so not showing a price to earnings ratio, and a dividend yield, well, it's been in and out of dividend paying. I see there it says 3.8. Let's go straight to the share chart.
Well,
so
like you can see there,
if you look at it over a longer period, it's done even worse.
Yeah.
I mean, the all-time high of that one was something far, far higher, but it's kind of crunched, but it has had a nice bounce because they delayed their final settlement with the US government.
It has. So, I mean, this bank is just riddled with problems for the last couple of years. They had a massive, over 7 billion fines after the financial crisis. Now, recently,
because they were actively in the US market, marketing subprime mortgage, collateralized debt obligations, securities, all that bad stuff.
They were very active there, and then now they've been fined over 630 million due to the fact that they've sort of had this whole scandal about money laundering and etc. They've called it a Russian money laundering
so they
scandal.
held accounts for people that themselves were not compliant.
Exactly. So it hasn't been a great time for them. They're not profitable. They've made a $2 billion or 2 billion euro loss, and they've now not declared a dividend. I saw there's a dividend yield there, but they haven't declared a dividend. So the company isn't profitable. They have made bad mistakes, but they have been sort of very out of favor, like you can see on the graph.
But they're out of ICU, right? Because the concern was that they might just go into
nowhere.
But the reason it is because the general environment is better, the regulatory risk seems to be abating. As I said, they did a final settlement with the US government, which worked for them. So, and in Europe, I mean, I don't know, maybe Europe's getting easier, smaller,
it does
Brexit.
It does seem like there's sort of a bit of inflation, a bit of growth creeping into Europe and sort of settling down there. And we know QE there is still going on, which could probably still lead to some money around.
But it sounds like it's a sort of little small move against a rather negative backdrop. So avoid.
I would rather just stay clear here.
Easier and safer places to be.